Hey folks, Ashley Garner here. So listen, quick video on something that's very important. It's kind of a niche thing, but it is very powerful if you qualify. And that is, are you a real estate professional in the eyes of the IRS? The reason this is important is because in the IRS has these buckets that they put income into, income and losses for purposes of taxes. So like an ordinary income bucket. And that's like your day job, right? And if you have an ordinary income, then you can only use an ordinary loss against it. Same thing with passive. If it's a passive income, you can only use a passive loss against a passive income. So if you're a real estate professional, then the IRS says that, your income from your day job of being a real estate professional is in this bucket. And then also your investing in real estate income is in that same bucket. And therefore, your losses from investing in the real estate can go to offset the income that's in this bucket. Okay. And that's important because in investments like the ones that we offer, a lot of times there are depreciation, which result in paper losses that you then could use to offset income from your real estate activities, whatever that is. So let's talk about it real quick. So here on the whiteboard, you can see, are you a real estate professional? And the answer is yes, if you meet both of these tests. So the first test is the 50% test. The second test is the 750-hour test. So now look over here at the slide for some detail. And we're going to put a link to this IRS, to the IRS website where this definition is. We'll put that below so you can go and search for yourself. And as always, with anything to do with these tax issues, make sure you consult your tax professional because we are not that, okay? 50% test. More than half of all the personal services you perform in all trades or businesses during the year are in real property trades or businesses in which you materially participate in. That's the 50% rule. So half the time you spend working is it spent on something that to do with real estate. And then the 750-hour test, you perform more than 750 hours of services during the year in real property trades or businesses in which you materially participate. Okay. So those are the two qualifications. You've got to meet both of them. And then, of course, it goes on into further detail, down here, like what counts as a real estate trade or business. And then there's obviously a definition on what materially participates means. And these are all IRS definitions. And since they're the ones who charge the taxes, those are the rules you got to follow. But this really is worth looking into. Okay. There's married filing jointly. So one spouse could qualify for this, even though the other one doesn't. And now the married income is in this bucket. That's huge. Sometimes you may have one spouse that or earns a high W-2 income, but then you have another spouse that is considered a real estate professional by the IRS. And so now there are some interesting things that can happen with your real estate investments and if they offer passive losses, et cetera, et cetera. So this is something that's very important. You definitely need to look into it. You definitely need to talk to your tax preparer, your CPA, and educate yourself on whether or not you qualify for this. Your decisions and it have to be, something that you make your own decisions. So you have to rely on your tax professionals and the information you gather. But if you do, this is important and you need to take advantage of it. If you don't, you're missing out on a very big opportunity to save or at least defer lots of taxes. Okay, thanks. See ya.